Hello, everyone. Welcome to our weekly market update by SE Securities. This is for the week ended 11th June 2021. And as always, we will be taking you through what happened in the stock market, what are some of the major news that will affect the economy and the market moving forward. We'll also look at the bond market as well as the global commodity market and some global market news as well. Followed up by our technical analysis of the all-share and our pick of the week. So to kick things off, the stock market this week had very tepid growth, with foreign selling being one of the major key highlights, really. So if we look at the all-share index, it rose by 0.01% this week, whilst the S&P rose by 0.03%. Like I said, the foreign transactions seem to be the main highlights, with foreign purchases for the week amounting at 385 million, while foreign sales came in at 1.1 billion. Wednesday, though, marked a first in a while, and that is where foreign purchases actually surpassed foreign sales, and the bulk of the demand was primarily on counters such as Hemas Holdings, Tokyo Cement, and HMB. However, this was erased completely on Thursday after a significant foreign sell-off, as we can see over here, on the back of major foreign selling in HNB. In terms of some of the more macroeconomic news pertaining to the market, the major highlight is, as most of you all might be aware by now, is that the EU Parliament moves to temporarily strip Sri Lanka of its GSP plus status. And that the main reason why they've cited this is that it's the government's failure to adopt human rights reform. And it's particularly focusing on the Preventative Terrorism Act, which was brought in. Now, what are some of the downsides to this? This can significantly hamper our export earnings moving forward, as the European Union market is Sri Lanka's second largest export market. So we really do need to keep an eye on this. But I emphasize that they've adopted a resolution to consider the temporary withdrawal. So it's nothing concrete as yet, and it's a very fluid situation that is being taken up at the moment. In other news, the central bank announced that Sri Lanka should maintain its imports controls in a bid to check the trade deficit. 2020 figures released by the central bank shows that imports has actually fallen at a higher rate than the fall in exports. However, this was blighted by the fact that due to the pandemic, remittances from tourism came to a complete halt. So the central bank still does maintain that import controls do need to be in place to alleviate the government's strain on its current balance of payments situation. In other news, the Sri Lanka Investment Forum was conducted this week. This was Asia's first ever virtual investment forum, held with 4,500 participants. And the main aim of this forum was to display the attractive investment opportunities that will be arising out of Sri Lanka, with particular attention paid towards the Port City project. The country-specific sessions were designed for investors from China, Japan, India, South Korea, the UK, the EU, and the United States. In terms of the rupee and the local bond markets, the rupee actually depreciated across all major counters. In the secondary market, we saw bond yields seem to have eased somewhat. Short tenure bonds were seen to have eased by around 5 basis points, with bonds maturing in 2013 closing at 623.28. And bonds maturing in 2024 closed in at 660.70, down from 665. But still, long tenor yields remained flat on Thursday, still showing that there is very little appetite for the long tenure bonds. In terms of our global commodity outlook, so one of the major highlights this week was that aluminium prices rose by a considerable amount. So we see that there was a nearly $58 appreciation in aluminium prices. And this was on the back of low production from China, as well as high demands from other part of the world. But we expect aluminium prices to also increase in the long term, and that is from news yesterday where the Chinese government have pledged that they will go carbon neutral by 2060. So this will signify that they will ramp down on steel and metals production, and China is the premier producer of base metals, base metal manufacturing. So we will see counters such as copper and aluminium rise, but bear in mind this will be in the long term, as their target is by 2060. And also we need to maintain that just because they do go carbon neutral, that might also mean that they just move most of these factories offshore. We also saw oil have an uptick as demand grew, with economies, particularly in Europe, starting to come out of the pandemic, and we maintain the stance that this will drive oil prices up in the summer months. If everyone recalls, 2 weeks prior in our weekly roundup, we did say that we set a target price per barrel of $80 for this summer, and it seems to be trending in that direction. We also maintain the upward momentum on gold. Gold also was a counter that saw some significant increase this week. And we do maintain that that upward momentum will remain for the remainder of this year. However, we believe that this will dwindle in the next year as inflationary worries somewhat subside. And following on from that final point, if we look at the global stock markets, the US market rallies as investors believe inflation may just be a blip. Asian markets were mixed, but that followed a rally in the US shares and treasuries as investors aligned with the Fed's belief that rising inflation might just be a temporary blip. The US CPI or the Consumer Price Index in May was primarily driven by categories associated with the broader reopening of the economy. So what they do feel is that although in the short term inflation might rise, in the long term it will actually plateau and may even come down. So we did see US stocks rally. In terms of the European markets, it was very much mixed ahead of that US inflation data, but most of the European economies will be looking, as well as the global community will be looking at the announcement of the European Central Bank's policy decision, as well as its projection for the Eurozone economic growth and inflation. So these are the major news headlines for this week. I will now hand it over to Harin to go over our technicals for the all share, as well as our pick of the week, PABC. Over to you, Harin.
Thank you, Nuwan. So first of all, I'll start with the all-share index. So this is basically the daily chart, whereas the RSI is 66.35 and the index managed to close at 7,610.3 for the week. So basically, we can see that there was somewhat of a bearish candle on 8th, and then there was some bullish momentum carrying the index up again. So my initial prediction is that the index could actually consolidate in between this area, which would be 7,400, 450 and 7,700. So this is basically the two areas of daily support and daily resistance. And also looking at the moving averages, of course, we can see that initially that it's basically the price the index is trading above the moving averages, and it indicates still a bullish momentum. So there's still potential, there's still possibility and potential that the index could actually reach the high, which was on April high, which is 7,666, whereas it is the daily resistance of 7,650, 7,700, that key area. So it's still possible to touch the daily resistance 7,650, 7,700. So a breakout from this key area will be able to expect the next daily resistance of 7,850, 7,900. So that would be after a breakout of this daily resistance 7,650, 7,700. If the index fails in the sense rejects from this area of daily resistance 7,650, 7,700, still the index could actually consolidate between the daily support of 7,450 and 7,700, whereas this area is considered to be a ranging area, and if the index rejects from the daily resistance 7650, 7700. So we do have, so looking at it from the overall perspective, is it still remains a bit bullish because it's trading in a ascending trend, and if the index manages to break this daily resistance and the previous structure high, we can expect a new structure high that would be at the daily resistance of 7850, 7900. So moving ahead with PABC. So basically this is the monthly chart, and the RSI is 56.38, whereas the whereas PABC managed to close today at 17 rupees, which is also above the monthly support of 14 and 15 LKR. And it manages to close at the weekly resistance 1750, whereas the closing price was 17. And we can see somewhat of a bullish momentum because looking at the 18 and 80 EMA levels, which are exponential moving averages, the price is actually trading above those EMA levels, which indicates still a bullish momentum. So overall, looking at it from the monthly perspective, it indicates a bullish momentum. So first we have the weekly resistance of 1750. From that key area of 1750, we can expect the price to reach the next resistance, which is the monthly resistance 1920. So basically, successful breakout, there needs to be a successful breakout from the 1750 region, and then only will be able to expect the stock to reach the price to reach actually the monthly resistance of 1920. So, and also breaking that key area, if the price actually manages to break that monthly resistance also, we'll be able to expect the structure highs which were on January 1st. So January, we were able to see the price has been like very bullish, whereas it reached the weekly resistance of 22.5 key area, and then it came to the monthly support of 14, 15 LKR. So if the price actually manages to break that monthly resistance of 1920, we'll be able to expect that previous structure high as well. And also, if the price actually gets rejected, continuous rejection from this weekly resistance 1750, the price could actually consolidate in between 14 rupees and 1750. So there needs to be actually a breakout from this region of weekly resistance in order for us to expect the next resistance 1920 LKR. Thank you. Over to you, Nuwan.
Thank you, Harin. As always, we are glad that you all could join us for this. And if any of y'all do require any more information regarding this, the report will be sent across our client mail. And as always, we thank you for taking your time to listen to us, and we wish you all a pleasant day and a pleasant weekend. Thank you.